Hello, that's much better. Good afternoon and welcome to today's Trading the US Open live here at the Live Trade Room. So I hope you're all keeping very, very well indeed. So those of you that are perhaps new to joining us for this session, we're looking to trade, like we say, the US Open, and what we're looking for is some high probability trading opportunities to look to capitalize on for the trading session ahead. So what we do and what we focus on is becoming a master of price action. That's understanding truly what's happening in the price and generally looking to go with the markets, looking to cut our losers short and let our winners run. So we have a process to identify high probability trading opportunities. Then we go through a bit of a process for us to execute those trades effectively. And it's all very much calculated trading. And then we have a go through a process which we're currently in with two profitable trades at the moment, which I'll just explain to you now very shortly, which is about your ability to manage that trade without freaking out, without panicking, without any kind of normal behavior that most new and inexperienced traders can possess when they trade these financial markets, but to just stay nice and calm, look at what price is doing, and if the market is moving in your favor, to look to go with it. And that's the key to successful, consistent returns. Now, everything we do is within is as a result of looking to generate consistent returns when we trade. Okay, so without further ado, then let's just start with our risk warning, as we always do. So do familiarize yourselves with the risks involved in trading these financial markets, and be aware, of course, of those risks at all times. So before we begin then, let's take a quick review of potential market moving news. And this will not take very long for us at all. The reason for that is there's very little news for us to concern ourselves with. Now, we do have a 3 p.m. Confidence number coming out, and it's slightly down on the previous, but these are effectively fairly decent numbers on a consistent basis. So we're looking for a small deviation on the previous figure. Obviously, consumer confidence is an important indicator. It's not the most important, but it is important as far as how much confidence do Americans have in the purchasing of products and services. And obviously, the higher that number, the more confidence they have. So if we get a positive figure over and above the 126.6, it might benefit the US dollar, and if we get a negative figure, it might affect it adversely. So we will keep a note and a mental note of the 3 p.m. News event, which could shake things for even a little while in these markets. But let's have a look and see where we are. So for those of you that were able to join us this morning, we were able to get in to, we very clearly were able to identify an ongoing trend evolving, and I'll show you the daily time frame just to give you a bit of background for those of you that are perhaps new to this session. There's a lot of levels in here, so I shall get rid of a few of them for you just to see it clearly. So what we have in this market is a really strong structure around the 97.90 level, and our trade analysis was pretty straightforward actually. If we get continuation and we break below the 97.90, we'd expect continuation. As you can see, there's nothing but air beneath this level, the 97.90. We're now down at the 97.57, and would really expect continuation. Now, we might get a little bit of short-term sort of rally and kick into the market, but eventually we'll expect this market, and certainly with new traders coming in from the US, looking at this opportunity, might look to continue to sell it. We are seeing some dollar weakness continue again today. So we have the fundamentals and the sentiment, behind the dollar trade at the moment. So that's quite important. So we're seeing the continuation. We're seeing the decline in the US dollar, certainly against the Swiss, and we also look for the same opportunity in the Canadian dollar. Now, they're both slightly at different stages, certainly from a price action perspective. Let me get rid of this particular blue line just sitting in here, and we'll also get rid of a few of these now as well. So you can just see it clearly. We had our structural level yesterday. We saw a break below the 29.86. We were looking at this market all day yesterday as well, So I know there was a couple of you that were able to capitalize on that trade, which is good, and we've seen some continuation today, and it's on that continuation below the daily low that we are looking to see this market continue lower. I just want to see what that level, the 29.19, what it refers to. Okay, so it coincides with these levels over here. Let's see how price action stacks up on a smaller time frame, because that's the next thing we're going to do, is to try and calculate and gauge what level this market is likely to push towards. So we're now down at this level. We got in at the 29.44 level just in here, and we've seen a nice strong move down. We've brought down our stop loss now, so I think there's only a 2 pip exposure. It's still just above this handle in here. So what we want to see now is this market to create a bit of a pullback, very likely in line with something like this. It's likely to come back to maybe that level. And then if we don't get an opportunity to sell it from that level, we might be able to add to the trade. We'd expect it to continue lower and then create a lower high and then book in that much profit on the trade. So this is the whole process of looking to trade structure. And not freaking out just because we're up, whatever the case may be, 25, 30 pips. You know, this could turn into an 80, 90, 100 pip move. If that's the case, let's keep going with it. We're looking at it on a 5-minute time frame. So we'd expect to pull back at some point. Now, the pullback could be quite shallow and we get an extension, or it could be quite a strong pullback. We're not leaving our profits on the table. What we're looking to do is to trade structure consistently. And like I said, sometimes you get really kind of shallow pullbacks, and you get these really extended moves where you can put up with these very, very easily. On other occasions, you get the extension lower and you get what looks like a reversal, but really not quite. But it just makes sort of trading a little bit more tetchy. And you could get the pullbacks, which are quite pronounced. You still got the lower lows, you still got the lower lows and the lower highs, but it's just trading conditions that are a little bit, you know, when you get these shallow pullbacks, those are fantastic because you can book in profit regularly. These ones a little bit tougher to book in that profit as the market is moving in favor. The important thing that we're creating is lower lows and lower highs. So whichever way is fine, we'll still work with the structures as this market unfolds, and it's a very objective way of trading. It's quite a clean cut approach. Oops, excuse me. Let me take that down again. It's a clean cut approach to trading these markets, and some days you have massive winners, and other days that might not necessarily be the case. Okay, so what I wanted to just briefly do. So really what we can do is we can identify, of course we don't want this market pulling back 15, 16 pips. But if it does, this is the natural level for it to pull back to. And we've effectively removed all the risk on that trade. So when we apply the same logic to the dollar Swiss, there's plenty more scope for this market to continue lower. Let's go to the 5-minute time frame, and this is slightly different. So this, we've had to be super patient really, but as you can see, there's a bit of a downward moving channel, and then we get the confirmed break. So really this level in here could provide a level of resistance, and we'll see if we're in these trades managing the trade that we're currently in, but we are potentially looking for other opportunities to capitalize on this move as well. So we've done the analysis, we know what we want to do, we want to trade it, and now we want to maximize the opportunity if we get that opportunity to do that. So we'll monitor these levels in here. We get a pullback to 97.62 would be the natural level to pull back to, and that is the dollar Swiss. So both of these markets kind of are operating in a slightly different way, but that's not unusual at all. You have some traders that will be a little bit more European market centric, so looking at the Swiss franc, and you'll have other traders that will be taking a bit more of a focus on the dollar CAD, and of course they don't need to operate in exactly the same way. So both of them have come from highs. So in a straightforward fashion, they're both extending lower. They both went through a little bit of a phase and have recently just broken out to the downside, which is exactly what you want to see. Both have extended and made new lows. So now we're very likely to see the pullback, hopefully somewhere in and around this area. Might give us another opportunity to sell it. If not, if it just keeps moving lower, then we'll keep moving with the trade. So now we let the trade decide what we do. There's certainly no need to preempt. We know what happens if it pulls back. We know what happens if it continues. If it continues, we'll continue to make money on the trade. If it pulls back, all it might do is give us an opportunity to get in at a higher price once more. So we've taken risk off the table. We've actually booked in profit. This is a profitable exit now. It's only a small pip gain at the moment, which is only 5 pips. But we are currently up probably about 25 pips as things stand in that trade, and we're about 23 pips up on that trade. So it's just important to acknowledge that there's plenty of scope for these markets to continue lower. So as long as they fit and conform with the trade, and they don't sort of they don't do their own thing, then we're quite happy to go with that. We're quite happy to go with the market, and let's see at what point. Obviously, a decision will be made for us to take profit. It's just, could it be at these levels, or could it be at 20-30 pips lower? We don't know. We'll have to wait and see. But the point is, we'll let the market decide what we're looking to do, and we're not going to arbitrarily just put in a 20 pip take profit. That we know is an advocate that so many trading educators are big fans of, and you know, it can make real sense every time you get into a trade. You know, limit your profits, limit your upsides. That is what they're advocating. For us, why would you limit your upside potential? Getting into these markets, they say is the easy bit, and then actually sort of getting consistent entries is actually really difficult. You've got to be super patient for them. So we've got a slightly different outlook on a lot of the normal perpetuations and a lot of the rhetoric that you hear about trading education companies. We actually, if we say we let our winners run, we want to let them run. We don't want to be diving in and arbitrarily putting our own. Yes, we do use discretion with stop loss, and yes, we do look to mitigate the risk on the stop loss as quickly as possible. And we want to get into a situation where we are risk free, which is the situation in which we currently find ourselves. So there's only profit to be made from these trades now. Psychologically, great position to be in, but we don't want to limit our upside. If this market keeps tanking like it did yesterday in the dollar CAD, we saw an 80 pip move yesterday. Could that happen again today? There's no reason why not. Absolutely no reason. Now, if we start getting structural failures across the board, and we start seeing other markets where the dollar is beginning to weaken quite considerably, or strengthen, should I say, then of course our decision making can change very, very quickly. And to just explain what that looks like in advance of it happening is, let's say we attempt to make a pullback on this market, and this market then fails to make a new low, and then starts to break in this fashion. That's a clearly defined structural failure. We don't want to be in this market above that level. So under those circumstances, we'll get out and we'll book in this much profit on the trade, and that's what this trade was giving us. Same situation, if we get a bounce back and it creates a high, and then we attempt to make a low and it actually fails, then that is a sure sign to us that actually this is the level we'd be exiting in. Now we won't be making as much on this trade, but it will still be a profitable trade. So a lot of this hasn't happened yet. We're just going through the psychology and the approach. So this is effectively how to manage profitable trades, and to just put a few different angles to the situation. Let's say, for example, that wasn't the case, and we get a little pullback, and we get these markets extending lower below these lows, and we see that across the board. Not only will we see quite a large potential gain to the downside, we're also still going to book in that much profit and let the trades run. So and this is what we pride ourselves on, is when we say we cut a loser short, sometimes we get really impatient and we'll say, right, well, let's get rid of it now. Let's not hold on to it. It's proven to us that it's not working, because what we're waiting for is these types of trades that just conform exactly as we would like them to. And when that happens, you get a certain, I mean, this is sort of really what trading is all about. If you trade the markets technically, where you're trading the trend, you know, if that's the case, if that's the type of trader that you are, then that's exactly what you should be looking to do. Trade that trend. Let the market determine when you exit. And that's an important distinction to make. You know, some of the things that you need to consider from a consistency and discipline perspective is, what market should you trade? How do you get in? How do you manage that trade while you're in it? And how do you exit for profit? And obviously with risk management built in that whole decision-making process. And that's really what trading is for professional traders and those traders that make returns trading these markets. If you put all that together in a coherent fashion, you will give yourselves a fantastic opportunity to make some consistent returns, which is obviously what we're all here to do. Okay, so that's the dollar Swiss and the dollar CAD. As you can see, they're kind of extending lower. We're getting very close to the breakout here in the S&P, but we've been sort of monitoring it all day, and we still need to break above the 29.01. So let's go through some of these markets, and some of them are in better positions than others. So we've discussed this morning again for the last few days that we're still in this little pullback phase in the euro dollar. Yes, it is strong against the dollar right now, but some of these dollar pairs are in slightly different situations. When we look at the pound dollar, we haven't broken the weekly high, whereas in the euro we have. Yesterday we broke it quite convincingly. So they're at different phases. The yen is beginning to strengthen a little bit against the dollar, but effectively the dollar and the yen are both weak. Probably the dollar is slightly weaker than the yen. And then we've got the two trades which we're taking, which give us clearly defined, you know, really strong structural moves below a major level, so they're a little bit more advanced as well. With the CAD, we're firmly in a downtrend. We're only trading the next leg to the downside below the 29.86. From a trade identification perspective, it's hopefully quite a visual one and an easy one to identify. The Aussie dollar is, again, it's similar to the pound dollar, not quite breaking above the weekly highs, 73.81, so we've got time on some of these trades. The New Zealand dollar is getting quite close to that level, and the significance of the level is it would be a structural failure at that point. So that would be a bit of a game changer for the dollar against the New Zealand dollar. It would be a reversal. Now we're already seeing them in the dollar Swiss, the dollar CAD, not quite yet in the dollar yen, and a break above this would add the New Zealand to it. And then over the coming days, we're likely to see the Aussie dollar, the pound dollar fall into suit, the dollar yen. So you get this sort of, when the dollar strengthens, you can trade the dollar, you can trade the correlation between all these markets. And when the dollar weakens considerably against all of these, you can also get you can also get these markets behaving as a correlated set of currency pairs. Yeah, Hans, just looking at your message there, monster bar forming on monthly euro dollar. Yeah, without a doubt. Let's have a look. So let's have a look at that on a monthly time frame. Yeah, complete rejection to the downside, isn't it? But look at the price action over the last 2 months. So this is June and July and August. Horrible trading months. Now we were able to capitalize on most of these moves to the downside for 3 or 4 months. And you can see that it's ground to a halt, can't you? You can see that we're like, this market isn't really interested in squeezing much lower below those levels. So really, if we start breaking previous monthly highs and we start getting into these levels, then we're very likely to see this market create a bit of a platform off that level. So without a doubt, there is significant signals from a technical perspective to suggest to us that that the sentiment behind the dollar is shifting. Now we are interested to see if that follows through or not, because up until 2 weeks ago, you could argue 2 weeks ago, the dollar was not letting up. It was continuing its move, and we've had a really strong sort of reversal ever since over the last couple of weeks in these markets. So don't forget, we are still trading in the month we're trading effectively in the month of August. So we're going to have a lot of traders coming to these markets next week, and they might have a different opinion about the dollar. So what we want to do is just focus on trading what we're seeing and not necessarily trading what we think. So yes, right now there is some weakness in the US dollar. Could that change very, very quickly? Of course it can. What we want to do is trade the signals, trade what we see, and not necessarily look to trade what we think is going to be the medium and longer term view on this market, because of course it can change pretty quickly. So here we are now. We're currently below the 29.19 level, which is exactly where we'd want to be. And what this has created is a new low. We hopefully break below the 29.14. If that's the case, we can actually use this high here to book in that much profit on the trade. So no need to just react right now, but that might come very, very shortly. So hopefully we'll get that little move lower, and as you can see, this market is not quite ready to do that just yet. So a little bit of patience is really required, and we'll see what these markets are prepared to give us today off the back of tomorrow's signals. Hans, do you happen to be trading the euro dollar by any chance? Are you currently in that market? I know a few of you are, and quite rightly so. In hindsight, we're really, there's a lot of strength coming in to the euro. We're seeing it against the pound. We're seeing it against the dollar, obviously, and we're seeing it against the yen. So, you know, the euro is one of the stronger markets out there at the moment. So there's no denying that, and anything above the weekly high, 1639. Represents a viable opportunity. We've just preferred the opportunities from a structural perspective. So now we're breaking below this level. So let's just wait for the close and make sure it's not a rejection of the 29.14, and then we can book in some nice profit on that trade. And let's see where we go. Yeah, so you're looking for longs on the pound dollar market. We'd absolutely concur with that. The only caveat we would suggest from purely a price action perspective is a structural failure, because up till now the market is moving to the downside, but a break above the 29.36 to be precise constitutes a structural change in this market, and at that point a buy trade will definitely be on the cards, except it's not on the cards just yet because we are just 20 pips 25 pips below that level. So what we don't want to do is to preempt the move, knowing that some resistance could come into this market at that level, and from a consistency perspective, it wouldn't necessarily bode well or stack up for us as things stand. So that's the pound dollar then. We are very, very close to that level as things stand. So viable opportunity just for us, just not yet hands, but we absolutely see the potential in it, certainly above the 29.36. So yeah, we've got news in 2 minutes. Some very low impact news. So yes, we've got goods trade balance. So that's an interesting figure to look at based on sort of recent trade balance discussions. So this is the difference in value between imported and exported goods during the reported month. So it's a monthly figure, and as you can see, it's nearly always negative. That seems to be the nature of the US economy. Whoops, excuse me. No, that was the better way to do it. So over the last over the last three or so years, it's been between sort of a low of 55 billion to a high of 75 billion. So these are some of the issues that obviously Trump has. Now the economics behind the US being a fiat currency, globally used and accepted currency. As a director, and I'm not an economics professor by any stretch of the imagination, but you do well to speak to either James or to Tasso about the economics behind all of this. But the general consensus is that the US is always going to be in a deficit, just because of the nature of the US and the role that it plays on a global basis. So it's very interesting to see how the trade talks are going to start unwinding, certainly with regards to the NAFTA arrangement with the US. The US sort of making changes to trade deals with Europe and also to China, and then sanctions against Iran. So they're obviously picking a number of fights really at the moment on the back of the trade deficit. I mean, whether that's right or wrong, we shall obviously wait and see. What does interest us? So this is a negative number. So that's likely to add a little bit more momentum maybe to our trades as things stand, and maybe more so to the Canadian dollar. So as you can see, we got the flush lower, but we pulled back above the 29.14. So hopefully this candlestick now will just close below it, and we don't start getting a kind of a double bottom situation. So that's what we need to avoid. Hiya Mike, good to have you on board. Bullish outlook for gold, question mark. Doji candlesticks right above the resistance. You're absolutely spot on. So now we're looking like we're getting this impulse. So now we're going to be hopefully closing. If we close in about 2 minutes time, then we'll close below this level. We can then now use this as our structural high. Doji candles right above the resistance. So yeah, let me see again. Yeah, it's kind of at the resistance, Mike, at the moment, isn't it? When we look at this chart, so We also have the weekly high in there at the 12.14.05 level, and a weekly high, should I say. But yeah, we're just hugging this line, and as long as that's the case, that's absolutely fine. Bullish outlook, technically speaking, on a daily time frame, we've had the thrust to the upside, we've had the pullback to the 1182, and now we are extending above that level. We're just running into this level of resistance, just sitting in here. So a clean break above the 12.14 might give us a better opportunity to buy this market. However, it is a counter trend move, so that needs to be taken into account. The market has always hugged this line since April, so it's likely to continue. Even when we look at this price action here back in June, it was moving sideways for a long period of time before we got the flush lower, and only one of these candles failed to kind of close or open above this line. The other candlesticks stuck to it like a little bit of glue. So we just have concerns, Mike, really to the upside. Again, what we would like to see is a really strong structural failure where we extend to perhaps even push a little bit higher. It attempts to make the new low, and then this level can become a bit of support. And then when we get that structural failure, then the high probability trade starts to kick in, and we start unwinding. Everything here starts to unravel, and price starts to increase. It's just right now, again, being consistent in our approach. We're not really seeing the real benefits to buying gold just for the time being, but that can change very, very quickly. But good shout, very, very good shout. And like we say, it's just our analysis on it. It's just our of course, our opinion. So now we've got this close firmly beneath this level. So we'll take note of the high, which is the 29, let's say 29.25. So we'll bring this stop loss down. So 29.25, and we'll just put a couple of pips above it. So now we're effectively breaking even, and now we're building in 16 pip take profit on this trade. However, the market is much lower than that. We are approximately 36, 37 pips up so far in the dollar CAD. We have our entry back up here, and we're going to continue to trade the trend. To trade the structures, and some days that gives us really strong moves because we're going with the market. On other days, potentially not so much. So that's the dollar CAD. Dollar Swiss. So we're clearly getting different bits of price action. We'd actually like this price to push back a little bit further if we possibly can, back to the 97.62. We now take a note of this low, and just what we're looking for is a structural failure. We never really saw a structural failure in all of this price action, so there was no need to act. But we don't really want this market to go to sleep. We want it to bounce back. If it's going to bounce back, let it bounce back, whatever that level may be. It might be even a bit higher, but then we want to see the next attempt lower, and it has to break the 75.51 for us to book in more profit on that trade. So right now we're in a profitable trade already. So some good trading so far, but let's see where we end up with this market. And if we get a nice sizable move, we'll book in nice profit on the trade. And that's what trading is all about, trying to be consistent and disciplined with your approach. And of course, within that is patience. So those are the three pillars we think you need to start acquiring to be consistently profitable. Consistent in your approach, disciplined with your capital, and patient, waiting for those opportunities. And not really, you see, many of you can actually trade using your mobile phones now. We do appreciate everyone is very, very busy right now, of course. But there's a real opportunity to make consistent returns when you trade. It's just most people don't give themselves the opportunity to do it properly, and certainly don't access the right education. And that's what the Live Trade Room has been built to do, is to genuinely give people a strong education without you needing to pay $5,000 for it, which we know is what so many other educators do. The problem with that is, I spent $11,000 on my own education back in 2008, and in hindsight, most of it was a complete waste of my time and money, of course. So obviously that's very difficult to take. Where I benefited most was getting some sort of one-to-one mentorship in a similar fashion to what we do with you now. And that changed everything. That was able to put things right in my head. If you had any questions, you could ask them. It was more, and ironically, that didn't cost me anything as far as fees are concerned. So what we want to do is to give people a real trading education based on live trading. It's really the only way to really learn how to trade these financial markets, and we'll do so without it costing you a penny, or very little. Like to access all of our live trade rooms cost $9.99 per calendar month. So we do hope that is a bit of a no-brainer for you to be able to trade these markets profitably week in, week out. So do have a look at the description below. It's got the details there, and it is a genuine offer to come and join us. And all that $9.99 does per month is just facilitate the back end effectively, just to make sure that we can contributes towards the cost of actually providing this. So that's all it does. So hopefully you find it a little bit of a no-brainer, and we'd be very delighted to welcome you to the Live Trade Room. Okay, so that's the dollar Swiss. So just flicking over to the dollar CAD, still extending lower. We've got our stop loss booked in, so we're in profit on both our trades, with the potential for these markets to continue lower. And let's not preempt, let's not get out too early just yet. Now there comes a point in the day where you think, right, well, you've been trading all day, let's bank the cash and let's have a go at these markets again tomorrow, and I'm sure that time will come. Once we get to a certain level, it's very much down to yourself whether you continue with it or whether you want to just bank that cash and make the most of the rest of your day. That's very much an individual decision. But right now we continue to trade the price action. We're seeing a nice flush lower, getting close to sort of a 40 pip winner as things currently stand. We're also advocates as well of booking in profit on a regular basis. So yes, we do want to trade the trend, but if you are happy with the amount of returns that you're currently seeing, any profitable trade is a great trade, and the more you can achieve, the better, of course. So I hope that all makes sense. If it doesn't, do let me know. So let's go back to, in fact, let me have a quick look at these two markets. So we want both of these to extend lower, and hopefully we'll have a really good trading day today. It's been a long time coming. There's been a few trades. There was we did a lot of planning and prepping last week for a few trades that really exploded, but they exploded once we stepped away from the trading desks, which is just a little bit frustrating more than anything, isn't it? So that's what happens sometimes. We're still trading summer markets, so hopefully you've had a bit of an idea in terms of the types of trades we look for, and if you join us every day, you can become really consistent at trading these markets, and that's what we look to do. So there's some strength creeping into a lot of these markets. So this is what you're suggesting, Hans. This is the same price action as we're seeing in the pound dollar, except the pound is just below that 29.39 level, the green line, whereas if we compare and contrast, the New Zealand dollar is actually in that same place as we stand. So it's the 67.20 level. So a break above that would give us the opportunity. What we might do is wait for the opportunity tomorrow now. We're getting into the latter part of the European trading day. So we've already seen a significant range in today's trading, so the likelihood is we'll have to wait and see, but maybe tomorrow we'll look for continuation above the 69.20 level. Just slowly grinding higher. Same for the euro yen and the pound yen. So gold, as Mike was suggesting, maybe above 12.14, but we need to see if we're going to see that bit of price move yet or not. US oil not really doing an awful lot today, and the S&P is just pulling off its highs just a little bit, so we'll see what's in store after yesterday's really strong move, largely off the back of this is slightly sort of squeezed a bit higher, but largely off the back of the trade deal between the US and Mexico, and now there is the strong belief that Canada will also do a similar deal with the US, but we shall wait and see. But certainly the stock markets are reacting in a positive manner as a result. The FTSE has weakened, so too has the Euro stocks, so no real follow through there, which is ultimately no surprise. A little bit of follow through in the CAC, but the Aussie is just extending. So overall, when we look at the global equities, a mixed bag, a mixed picture. So without doubt, the best opportunities are in the US dollar for now. So fortunately, we've been in them all day long. So let's see what opportunity it will bring. Okay, and finally, we'll just bring back the S&P just back into focus a little bit. Okay, so now we just need to trade the trend. We're probably likely to just stick with these trades now, weighing everything up. So we'll see how we get on with these markets, and we hope we continue to see either a pullback or some extension. So either way, we want to see some action. We don't really want to see this market just moving sideways for an hour. That's not that great, but let's see what happens. Any questions, as always, guys, just post them into your chat box. Obviously, if you like this video, please do click the like button. Also, subscribe to our channel. We do put up our daily trade watches as well on our YouTube channel, so you can see in advance the opportunities, the high probability opportunities that we discuss in advance of the trading session. So you'll see the price action as it unfolds, and you'll see those high probability opportunities. And the dollar Swiss and the dollar CAD were strong candidates. And again, in our capital growth webinar at 9 p.m. every evening, where we trade the markets for 30 minutes, for those traders who obviously are not available during the day but would like to learn how to trade and trade daily timeframes without the stress and strain, and look to capitalize on major market moves. They join us at 9 o'clock every evening for 30 minutes. And again, we discussed very clearly the dollar Swiss and the dollar CAD to the downside, and we're getting the follow through today, and that's what we're looking to trade as well. So really, it's kind of a coherent trading education here at the Live Trade Room. So we're quite excited about it all, and we do hope you can be a part of the process as well. Okay, so now we're just getting a little bit of a pullback in these two trades, which is absolutely fine. It's just part and parcel, and we just hope we get the next leg to the downside. And when we don't, we'll get out and we'll book in that profit, and we'll pack up for the trading day. So, and sometimes that profit is 20 pips, sometimes it's 50 pips, sometimes it's 150 pips. So, whatever these markets want to give us, we'll gladly take them. Okay, so so really we're just seeing the dollar Swiss just move sideways. That's all we're really seeing. So let's just conduct some daily time frame analysis then to see what sort of move are we likely to see in this market. We have a couple of aspects to consider when we're doing this, and the first one is an average true range. So you can use a 20 period. All it does is it calculates the highs and the lows and the range of the most previous 20 days, which is effectively 4 weeks of trading, and we're able to see exactly with this indicator how much volatility is in this market. So how far do these markets move per day? And currently it only moves about 51 pips per day, and as you can see, that's at a real low. So when we talk about reduced volatility, you get to see it in so many of these markets, and that's why they can be prone to a little bit more manipulation. So really not much movement during this period, as you can see, a little bit more recently. So we're seeing an average true range of about 51 pips, and we look at today's candlestick. We take the high, which is the 98.08, and we take the low, which is the 97.52, and as you can see, that's already a 56 pip gain in today's trading. So when I ask you, like the range from high to low on average is 51 pips. Today we've already seen 56 pips. So are we likely to see a multiple of that? Probably not. However, if we look at the candlestick the day before, we have 98.45 and a low of 97.87. So again, 60, 65. Sort of 63 pips, I think it is. Sorry, 58 pips, isn't it? So so that is seeing a similar kind of range from high to low. So now when we look at that, it might give us a slightly different opinion. The longest range day in probably the last, probably going far as back as June, was probably, it's arguably this one in here. So the high between that is the 99.18 and the 98.42. So that's 50. So that's nearly 80 pips. So somewhere between the 80 and the 50 pip barrier is what we're likely to achieve during today's trading. So hopefully that will put things into perspective. So we get to the point, if this market starts to go to sleep, we might actually start looking at the 97.51 as effectively our low for the day. Although it might break it, the chances of it doing so are probably a little bit slimmer. So that's effectively the management side of the trade, where you're actually looking and thinking, right, what can we get out of this trade? Maybe the reality is we might not be able to get that much more out of today's trading. Tomorrow's another day. We might get some extension. There's more volatility. More people are seeing the move. More people are entering these trades, and as a result, we're getting more of a price move as a result. So obviously, we're going to give it the benefit of the doubt. We're going to give it the opportunity to move. And the dollar CAD, we can do the same analysis in the dollar CAD. Let's go to daily time frame, and again you can see the volatility come right off since sort of June over the summer trading periods, and now we see a range of 82 pips per day. So interestingly to note that yesterday we saw a range from high to low of 30.67 to 29.53, so that's 114 pips. We saw that range from high to low, and today already we've seen a high of 29.82 to a low of 28.96. So that's a 90 odd pip move already. Yesterday, over the 100 pip mark. The average true range over the last 20 periods is 82 pips. So we've already achieved more than the average true range. So again, there might be a little scope for one more move to the downside, potentially, if things are to fit. So if we get the attempt lower and it fails and it starts to unwind, then it could give us an opportunity to actually look to get out of the trade and see how much more volatility comes into it. So we've still got a bit of time to monitor these trades. We're not in any rush just yet, but in terms of average true range analysis, we're kind of, with both of these markets, we're kind of within the range of its maximum daily range. So we just need to bear that in mind. Which again adds to the potential for an opportunity to sell at a higher price and add to these markets. It's kind of diminishing now as a result, and we want to try and just be as consistent as we can. Because if we added to these trades at a pullback of 29.14 or 29.20, somewhere like that, then we're very likely to just capitalize on a move maybe back to these lows and maybe not exceed them to any great extent. So we're now getting hopefully the structural pullback in these markets, and it's the next attempt lower that will determine how much profit we make on these trades. So while we're experiencing these pullback, guys, I'm just conscious of the time, and we do have traders over at the live trade room that we'll be moving across to right now. I just want to remind you again, please do read the description below. If you like our approach to trading these financial markets and you want to get more involved, please do. There's a 14-day free trial currently, so you're very welcome to access the range of services we have completely free for 2 weeks. So hopefully it becomes a bit of a no-brainer for you. And then if you decide to join us, it's only $9.99 per calendar month, just to contribute towards the upkeep of you being able to join us on a regular basis. So that's really what that payment is for. So if you do want to get a really good, strong, comprehensive education and learning how to trade these financial markets, then do please join us at the live trade room, and the details are below in the description. Please like and subscribe if you do want to be notified, and do click the bell as well if you would like to benefit from notifications when we are live. Feel free to contact us through connect with us through our YouTube channel, Facebook, Instagram, Twitter and LinkedIn. The details are all there up on the screen. Okay, so we're going to switch across now to the live trade room. So thank you all very much for joining us. We will look forward to hopefully joining us again tomorrow morning at 8 AM when we're trading the European Open. So for everyone here at the live trade room, take care, and we'll speak to you soon. Bye for now.